Hey YouTube, Will Lopez here, founder at advisorfi.com. Thanks for joining me here today. Today we're going to talk about independent contractors versus employee. That is, you have an LLC or you have an Inc. and you have individuals who work with you and you're trying to determine, should I keep them as an independent contractor or should I treat them as an employee? So we're going to ask ourselves two very important questions, and those questions are, what is our responsibility for paying independent contractors? So you have individuals who work with you. What's your responsibility to that individual as a business owner? And the second question we're going to ask ourselves is, when does an independent contractor become an employee? So we have businesses that we may use freelance help, or we may use individuals who help us get work done. When do I make that pivot, that transition from an independent contractor over to an employee of my own business? So we're going to talk about that here today. We should care about this greatly because the IRS cares greatly about this topic, and so does the Department of Labor in your state. So before we dive in, if you'd like to schedule a free 30-minute consultation with us, be sure to click in the description below to schedule time with us, or you can go to a web browser and type in meetme.so/freebie for a free 30-minute consultation. So let's dive right in. So first thing we're going to talk about is, which tax classification does this particular topic apply to? That is, I have an LLC or I have an Inc. and I'm being taxed a certain way in that LLC or an Inc. Does any particular tax classification apply to whether or not I make a determination for independent contractor versus employee? In fact, all four tax classifications apply to the obligation of determining whether an individual should be treated as an independent contractor versus an employee. Whether you have an LLC and you're a sole proprietorship, or even doing sole proprietor work without the coverage of an LLC, whether you're a partnership under an LLC, or you have a partnership without the coverage of an LLC, whether you're a C Corp, whether you're an S Corp, this particular topic, that is, I have individuals who work with me, I need to determine whether or not I should keep treating them as an independent contractor or turn them into an employee for my business. So why is this topic extremely important? Well, it's critical that you, the business owner, correctly determine whether the individuals who provide you service, that is, you're out there, you do photography work and you hire side contractor photographers. You need to make the determination whether or not you keep using those individuals as independent contractors or whether you treat them as an employee. And why is this? Well, generally speaking, you must withhold for employees. If you have employees, you must withhold federal income tax, withhold and pay Social Security, Medicare tax, and pay federal unemployment tax and state unemployment tax for all wages paid to employees. So that's why this is extremely critical. And as contractors, well, you don't have that obligation. You don't have to generally have to withhold or pay any of these kind of taxes on behalf of independent contractors, and this is where the temptation lies. So individuals who own businesses like LLCs or Incs, they have other individuals who work with them. Many people would like to treat those individuals as independent contractors because, as you can see, the obligation for treating an independent contractor as an employee is much more aggressive, much more requirements, and actually opens that company up to basically more taxation as far as payroll taxes are concerned. So depending on the state that you live in, you have certain obligations as far as unemployment tax. For example, if you live out in California, you have not only California state unemployment insurance tax, but you also have California education training tax, and you have all sorts of payroll related taxes in that state. It all varies state by state. But this is where the temptation lies. That is, you have an LLC or you have an Inc. and you have someone who works with you that really is indicative of an employee, yet you're treating them as an independent contractor. So that's why it's crucial. You need to make the determination whether or not you keep doing that or treat them as an employee according to the Internal Revenue Service Code. So IRS basically wants us to select a scenario. So there's two basic scenarios for all business owners or entrepreneurs. The first scenario is you are an independent contractor yourself, and you are in business for yourself. So you're working with other LLCs or Incs who treat you as an independent contractor. This video is not for you. We'll do another video for that. The second situation is you hire or contract with individuals who provide services to your business. That is, you have an LLC or you have an Inc. and you're hiring or contracting with other individuals who provide services for your business. This video is for you, and that's what we're going to cover over here today. So the IRS basically has three common law rules. These are basically facts or situations that kind of provide evidence of the degree of control you have over that individual and whether or not that individual has independence with you. And they basically categorize it into three categories. The first category is behavioral. That is, this deals with whether you, the company, have the right to direct or control how the work is done. So let's say you do photography work and you hire another photographer. If you have the right to direct and control how the work is done, that's more indicative of an employee. But if you hire that photographer and you totally lean on their expertise and you say, hey, show up whenever you want, do whatever you want, shoot whatever kind of pic style or photography style you'd like to shoot, it really doesn't matter to me because you are an independent contractor. You have independence with me versus if you hire another photographer, you say, hey, I want you to do this, that, and the other. This is exactly how I want it done, and I want to control, and I have the right to direct you. That's more indicative of an employee than a contractor. The second common law rule that the IRS touches on is financial. This deals with whether or not you have the right to direct or control the economic aspects of the work. So an employee would be indicative of this. You hire a photographer, you say to that photographer, I'm going to pay you hourly. It's going to be $15 an hour, and I'm going to pay you every Friday. Is that okay with you? Yes, it's okay with me. That's indicative of a financial aspect of an employee. But let's say you hire an independent contractor photographer. You say, hey, you send me an invoice, you keep track of your own hours. What's your bill rate? Oh, it's $25 an hour. Okay, that's fine with me. You have full independence as far as your relationship with me. That's more indicative of an independent contractor. So several factors of evidence that are considered under the financial control category are significant investment. So let's say you hire a photographer. Do they have to buy all their own equipment? Do they have to get licenses for themselves? You're not going to provide anything. That's indicative of an independent contractor versus an employee would be, I'm going to put you through training. The company's going to put you through training. The company's going to pay you, pay for all your equipment. That's more indicative of an independent contractor. The third common law rule is type of relationship. Now, this is really key here. This basically deals with whether you, as the employer, have evidence as to how the business and the worker view their relationship together. Generally, some things that kind of speak to this is, do you have the individual sign an employment agreement, a worker's contract? Do you provide the employee benefits, a pension plan? Do you pay for their health insurance? Do you say, hey, you're allowed 10 vacation days a year? Well, that's extremely indicative of an employee. But an independent contractor would be, I'm not going to provide you benefits. I'm not going to pay for your health insurance. Obviously, since you're an independent contractor, I don't have any obligation of providing you any sick pay, vacation pay, or any kind of employee benefits. That's more indicative of an independent contractor. So as you can see, there's heightened degrees of control and direction that an employer has over an employee, whether it's behavioral, financial, or the type of relationship, versus an independent contractor where there's more autonomy, more freedom, more independence that the individual has in your relationship to them, whether it's behavioral, financial, or kind of a type of relationship, whether they sign an independent contractor agreement versus an employment contract. The first is indicative of an independent contractor. The second is indicative of an employee. And so it's critical for us to make the determination, how is this relationship panning out and who has more control? If the independent contractor has more control over their relationship with you, whether it's behavioral, financial, or the kind of relationship, then they're more indicative of an independent contractor. If you have more control over the situation, whether it's behavioral, financial, or the type of relationship, then you're more indicative of an employer, and that's an employee that you're trying to control. So what happens if you're treating somebody as an independent contractor when you really should be treating them as an employee? Well, there could be what they call an employment tax audit. Basically, an IRS employment tax audit, or generally speaking, the Department of Labor audit, which obviously is the Department of Labor. They're very keen on employers not abusing the employee relationship. So what if you have an employment tax audit? What would happen? Generally speaking, many IRS audits of employment tax issues and with all parties reaching a mutual decision. So the Internal Revenue Service may come in and have an employment tax audit. Now, why would they do such a thing? Well, if you think about it, if you have an individual that you're treating as an independent contractor, when you really should be treating them as an employee, well, you're avoiding certain kinds of taxes. Well, which taxes would you be avoiding? Well, you would be avoiding federal unemployment tax, which the IRS is allowed to charge on all employees of businesses. You would also be avoiding state unemployment taxes and any other kind of payroll-related tax in your state. So like I said, California has the education training tax, the state unemployment insurance tax. They have specific taxes that are state-specific. So this is why an audit would trigger. They would come in and they would make the determination, well, you have that individual, the behavior, the financial aspect, and the type of relationship is very indicative of an employee, but you're treating them as a contractor because you're trying to avoid these certain tax obligations that you have. Now, obviously, the IRS says, obviously, at the end of all of the audit, both parties, both you and the IRS, would reach some sort of mutual decision. And what the IRS basically does is they do a Section 530 test. And what Section 530 test basically tests for are two things. The first thing they test for is consistency. Consistency of the relationship, consistency of the financial aspect of the common law rule, consistency of the behaviors of that individual. And the second test they would test for is the reasonable basis test. That is, do you have any reasonable basis for treating them as an independent contractor? So let's say you have a reason for it because, John Doe signed an independent contractor agreement. This is my reasonable basis for treating them as an independent contractor. He kind of comes and goes. He doesn't provide me his hours. I don't provide him vacation pay. I don't provide him sick pay. I have a reasonable basis for treating him as an independent contractor versus an employee. And so the first test, the consistency test, basically this test is, well, if they're an independent contractor, have you been consistent with that? That is, have you filed all the required Form 1099s with the IRS on time, reporting all the amounts that you've paid to the workers, that you have treated as an independent contractor? So they just want to look for consistency. Let's say you're providing them vacation pay, you're giving them a paycheck, you're not really giving them a 1099. You're saying, hey, I'm going to treat you like an employee, but right at the end of the year, I'm going to issue a 1099, but yet you have paycheck stubs or something like that. That's not very consistent in the relationship. That is, or if you have to pay, the example here is, that is, if you pay 2 of your painters as employees and 4 as subcontractors, you won't meet this test. So the IRS kind of gives this example. That is, if you pay 2 of your painters as employees and 4 as subcontractors, you won't generally meet the test. That is there consistency not only with the relationship, but is there consistency across all individuals? So you have individuals, you have a painting company, and all of them work full time. But for whatever reason, you pay 2 as employees because you can only afford paying 2 as employees because of all the tax obligations, and the other 4, you're going to treat them as subcontractors. Yet they do all the same functions. They report in, they check in, they check out, they get all the same benefits, they get all the same luxuries as the other employees, except you're treating them as a subcontractor. The IRS, according to the IRS, this is a glaring omission of the consistency test, which could get you in trouble during an employment tax audit. The reasonable basis test, the IRS basically states here that you must have treated the worker as a subcontractor because you reasonably relied on basically 4 things. First thing, a court case or a ruling to support your position. That is, you can point to a court case or you can point to some sort of ruling that you're allowed to treat that individual as an independent contractor. A prior IRS audit. So let's say you were audited before because you had an employment tax audit before, and you had Will Lopez at AdvisorFi, always a contractor, and during that audit, he was deemed a contractor, and you get audited again. Well, you can go back to the prior IRS audit and say, look, you guys audited me before regarding this employment tax issue, but this time nothing has changed. Will Lopez still is considered an independent contractor, so you can rely on that as your reasonable basis. The third thing is a long-standing practice in your industry to always subcontract people out. So there are a few industries where this falls into. Let's say program design. Let's say you constantly use, let's say, programmers out in India, or let's say in another state, because your industry, you're always constantly using freelance labor to do something like that? Well, if your industry has a long-standing practice of subcontractor work, then you can use that as a reasonable basis for treating that individual as a contractor. And the fourth thing is to demonstrate any other reasonable basis for testing workers as subcontractors. That is, can you provide any other evidence, any other reasonable basis that you would treat that individual as a subcontractor in the event of an IRS audit? If you can, then most likely those individuals are IRS audits. Now, you have to do this all in light of the 3 common law rules. That is, having direct control over their behavior, the financial and the type of relationship. So all of this kind of plays into each other. That is, if you have control over the behavior, the financial, the relationship, and yet you're not being consistent between all individuals, then you'll fail this test. If you have control over the behavior, the financial, and the individual, and you don't have any reasonable basis as to treating somebody as an independent contractor versus an employee, then you'll most likely fail the test. And what would happen if you were to fail the test? Well, what would basically happen is they would treat all the payments made to the independent contractor as wages, and they would ask for back taxes of Social Security tax and Medicare tax, unemployment tax federally and unemployment tax state, penalties, interest, and fines. So what would happen is they would just go back and change the monetary compensation that you paid that independent contractor with what they should have paid, and all the penalties and obligations would fall on you, the employer. So in the event of an IRS audit conclusion, well, if the IRS audit finds that your workers are employees, but you meet the consistency and the reasonable test. So this situation applies, that is, you have an individual who you're treating as an independent contractor, but they really were an employee, but you meet the consistency and reasonable test as an independent contractor, you won't have to go back and pay employment tax on the workers. Now, the workers, however, that is your employee, you remain liable, they remain liable for paying their share of FICA, Social Security, Medicare, federal income tax on their wages received. And if the worker have paid self-employment tax on their income tax, they may be entitled to a refund of the tax. But the employer would be obligated to then now pay federal unemployment tax and state unemployment tax, and may get in trouble with the Department of Labor regarding such. There are situations where the IRS finds out that this independent contractor meets the consistency test, this independent contractor meets the reasonable basis test, yet they think they should have been treated as an employee. The company will not have to pay employment tax on the workers, but they will look at the employees and they say, well, you need to make sure that you pay your fair share of taxes based on those wages. And if they've had to pay self-employment tax on those wages, then they may be entitled to getting a refund. So that's basically the difference between independent contractors versus employees. Down in the description below, I'm going to leave about 4 or 5 links that you guys could do some research on, provided by the Internal Revenue Service, as to that speaks more into this independent contractor versus employee relationship. And so the software recommendation of choice as far as whether or not you want to treat somebody as an independent contractor versus an employee would be gusto.com. Excellent cloud-based accounting software or cloud-based payroll software that you can onboard your individuals as either employees of your own businesses or onboard the individuals as far as independent contractors. Gusto.com. There's actually going to be a link in the description below for all the latest deals that we have with Gusto, or actually there's a link right now in the video that you can type into a web browser to check out Gusto as a payroll provider, but they will take care of all that obligation for you and highly automate this process or this interaction, this type of relationship that you would have with an individual, whether they're an independent contractor versus an employee. So guys, thanks for watching. Hopefully this answered all your questions in regards to independent contractors versus employees and how to treat the individuals who work with you as such. Thanks guys for watching, and see you on the next video. Hey, thanks for watching. Hopefully we were able to answer all your questions. Be sure to click on the subscribe button down below to follow us for future video releases. Check out this video up here for our best recommended video for you, and right underneath it, check out our playlist, which is our best recommended playlist. See you guys on the next video.